Welcome to the deep dive. Today we're getting into something pretty major on the global stage, the tariff conflict between China and the United States.
Right.
And we're going to be looking at it, specifically through the lens of comments made by former U.S. Secretary of State Blinken. These came after he left office back in April, critiquing the Trump administration's policies.
Yeah, those comments certainly make some waves.
They did. So our mission, really, is to unpack the key takeaways here. What does this conflict actually mean, especially for things like, well, national influence, soft power, and just global trust generally?
And you highlighted a really interesting point to start with.
Yeah, Blinken's assertion that Trump's policies were basically signaling isolationism to U.S. allies, and that this might kind of nudge them closer towards China.
Which is a fascinating dynamic, isn't it?
Yeah.
It really sets the stage. Blinken's timing was key, coming right as this whole reciprocal tariff thing was really heating up. His argument wasn't just about dollars and cents, It was that these tariffs were fundamentally damaging America's relationships.
The very foundation of its global standing.
Precisely. Which naturally makes you wonder how China saw all this unfolding. What was their perspective?
Exactly. And that's our first key area. The sources we've looked at suggest a really strong view from China's side, that they felt they had basically zero room for compromise or concession here.
No wiggle room at all.
Seems like it. The feeling was that backing down wasn't just about economics. It was a strategic threat.
Right. And the analogy used is, well, pretty powerful. It gets compared to the appeasement of Nazi Germany before World War II.
Wow. Okay. That's strong language.
It is. The idea being that in this sort of non-traditional security space, economic pressure, tech competition, influence giving any ground, could actually escalate things massively later on, almost like sowing the seeds for a different kind of World War III.
So not a traditional military conflict, but a strategic one fought on other fronts.
Exactly. And that's why a gradual step-by-step approach was seen as, well, just not feasible.
Why not?
Because it wasn't just negotiation. It was seen as strategic testing, accompanied by strategic offense. China apparently worried that if the U.S. seemed to win this first round,
A successful strategic test.
then that could open the floodgates. You might see the EU, Japan, India, South Korea, maybe even Vietnam, piling on with their own tariffs.
And not just tariffs, but maybe even public criticisms, slander, as the source puts it.
That was the concern. The Vietnam example is quite specific.
Right. The idea that if China looked weak against the U.S., Vietnam might feel bold enough to levy its own tariffs and maybe even call China out for hypocrisy, for double standards.
It really underscores how important perceived strength and consistency are in these high-stakes international games. China felt it had to stand firm right away.
To prevent that kind of bandwagon effect.
Absolutely. Which logically leads to the next point. What about China's own strengths? Their confidence in weathering this storm?
Okay, yeah. So the discussion shifts then to China's, well, inherent advantages. Its huge manufacturing base, its massive domestic market.
An engine within.
Right. These are framed as the basis for a minimum economic internal circulation, almost like a self-sufficiency safety net, and also a circulation upgrade, maybe implying moving up the value chain internally.
That seems to be the idea, a degree of resilience.
Yeah.
And what's really interesting is how this economic confidence seems intertwined with their, let's say, traditional security posture.
Ah, like the missile defense test.
Exactly. That large-scale test out in the Gobi Desert.
Yeah.
That wasn't just a technical exercise.
No, definitely send a message. What was the analysis on who that message was for?
It seems twofold, really.
Okay.
First, a pretty direct signal to the Trump administration we can withstand this pressure.
Okay. A non-traditional security fight needs traditional backing.
Sort of. And second, a warning shot towards other nuclear-related countries, specifically mentioning India and Japan, essentially telling them not to get any delusions, as the source puts it.
So, flexing both economic and military muscles simultaneously. But what if that wasn't enough? What if lots of countries did side with the U.S.? Were there contingency plans?
Well, the analysis touches on some pretty serious possibilities, extremely serious, actually.
Such as?
One mention is the bottom line plan, which involves potentially retaking Taiwan.
Wow. That's a massive escalation.
It is. And perhaps just as startling is the idea floated that war itself, or even just preparing for war, could be seen as a way to stimulate the economy.
Like the U.S. in World War II getting out of the Great Depression.
That's the historical parallel drawn, shifting the entire economic focus. It's a drastic thought.
Definitely. And this idea of potentially shifting from non-traditional security conflict up to the traditional military level based on judging the enemy by giving them the benefit of the doubt. What does that mean?
It sounds like preparing for the worst-case scenario, assuming the adversary might escalate, so you prepare to match or exceed that. Anticipatory escalation, almost.
Okay, it really shows how blurred the lines can become. Now, let's switch gears a bit. The EU response. That seems crucial.
Hugely important. The news came through that EU members actually voted to bring in their own first round of countermeasures against U.S. tariffs.
And the analysis frames this as essentially a victory for China's initial pushback.
And a failure, or at least a significant setback, for the Trump administration's whole tariff strategy.
Why did the EU do it, though? What was the reasoning, according to the source?
Well, it suggests the U.S. was facing its own headwinds at the time. You had the Silicon Valley Bank issues, the complexities around the Ukraine war, Middle East policy uncertainties, not to mention internal political strife.
So the U.S. looked distracted or maybe weakened?
Exactly. Giving the EU, as the source says, full reasons to bargain. They saw an opportunity to assert their own interests against the U.S. pressure.
Makes sense. And then Trump announces this 90-day pause on reciprocal tariffs for some countries, calling it flexibility. But the analysis we're looking at is pretty skeptical about that framing.
Very skeptical. The interpretation is that pausing tariffs on, say, country X doesn't really matter if country X just becomes a transshipment point for Chinese goods anyway.
Oh, so it's effectively the same as canceling tariffs on China, just indirectly.
Pretty much. If the goods find their way through other routes, the initial goal of blocking them is kind of moot, isn't it?
So the tariffs mostly end up hitting who?
American consumers, ultimately. That's the argument. The cost gets passed down.
Yeah.
And the source notes that, look, Sino-U.S. trade didn't actually stop after 2018.
It just shrank a bit.
Right. Suggesting you can't just easily decouple these massive economies with tariffs alone. Which brings us nicely to the financial underpinnings.
Yes, this part is fascinating. The potential role of financial market pressures in Trump's apparent shift. Rising U.S. Treasury bond yields, dangerous leverage. Can you unpack that?
The core idea presented is that there was a real fear of a major financial blow-up lurking, something like the 2008 crisis, or maybe closer to the SVB collapse.
And rising bond yields were a symptom of that risk. Too much debt, too much leverage in the system.
That seems to be the connection drawn. A warning signal. And normally in that situation, the U.S. might resort to, large-scale money printing.
Quantitative easing, right. But that was seen as risky here. Why?
Because of the state of the U.S.-China relationship. The concern, apparently, was how China, as a huge holder of U.S. debt, might react. Could they dump dollars? Could it destabilize the currency?
So the usual financial toolkit was sort of limited by the geopolitical tension.
That's the implication. This fear of financial instability is positioned as a really strong motivator for Trump's sudden flexibility, like the Sichuan opera face-changing the source mentions.
And the stock market reaction seems to back that up. It jumped immediately after the announcement.
It did, which, the source notes, conveniently leads to speculation about, well, potential internal coordination.
You mean insider trading?
The analysis raises that possibility quite directly. It mentions reports about Trump's son-in-law allegedly making billions by shorting U.S. stocks during this period.
Betting against the market he might have had inside knowledge of.
That's the suggestion. The phrase used is sharp. First-rate stock wizards create insider information. So the conclusion drawn here is that while Trump might have taken a hit publicly, his face was swollen, as they put it, the real big goal might have been these financial gains for associates.
That's quite an accusation. And it brings us back full circle almost to the damage to U.S. soft power, Blinken's initial criticism.
Exactly. This fifth section really digs into that. It echoes Blinken, talking about disastrous losses in U.S. influence and standing because of these policies.
The argument being that the intended show of strength actually backfired.
Yeah. China apparently saw through the toughness, perceived an underlying vulnerability perhaps related to those financial fears we just discussed. And the EU, they basically used China's resistance as leverage for themselves.
Played both sides in a way.
You can see it like that. And then there's this really, let's say, unconventional point about smuggling.
Right. The idea that high tariffs could actually spawn smuggling gangs dealing in Chinese goods, potentially even involving large entities like the U.S. military. That sounds pretty wild.
It's definitely speculative, but the logic follows a certain path. Higher tariffs mean bigger profit margins for getting around them.
creating an incentive for illicit trade.
Precisely. And ultimately, who pays the price for that? Probably still the American consumer, just through different channels. Plus, it highlights the dependence of U.S. businesses on China if they relocate to China to avoid tariffs.
That boosts China's influence, its soft power.
Exactly. It's a complex web. The source even hints there might be future quiet conversations between Beijing and Washington, specifically about those alleged financial dealings of Trump's circle.
Suggesting the fallout isn't over. Okay, so that leads to the final argument. The failure of this broader financial firewall strategy. What's the context here?
It zooms out a bit. It talks about a longer-term Western strategy using financial tools to try and isolate adversaries.
Like a containment strategy, but using finance.
Kind of. The analysis traces it back through events like the chaos in Egypt, targeting Iran, Brazil, India, Russia, with China as the ultimate target.
And there was a specific plan, like software and hardware.
Yeah, the software being the ideological, cultural, diplomatic, economic blockade efforts, the hardware being military postures, NATO integration, Western Pacific alliances pushing into South Asia, and encirclement, essentially.
And Russia was key to this whole thing.
Critically key, according to this analysis. The argument is the West really needed to significantly weaken Russia. The source uses the term digest Russia before they could realistically take on China full scale in this way.
And that hasn't happened.
Far from it. The West is still heavily tied up with Russia in Ukraine and hasn't really managed to bring major players like India or Brazil fully into this containment structure either.
So the attempt to jump ahead and encircle China financially without having dealt with Russia first
has predictably backfired, is the conclusion. It led to these major losses in U.S. soft power that Blinken warned about, even if maybe it helped stave off an immediate financial meltdown for a moment.
A strategy that was perhaps too ambitious or sequenced incorrectly.
That seems to be the core insight presented here. Forcing the issue before the groundwork was laid had real negative consequences for U.S. global influence.
Okay, so wrapping up this deep dive. We've covered quite a bit. Blinken's stark warnings about alliances, China's perception of having no choice but to stand firm, the EU leveraging the situation, those potential financial motivations swirling around Trump's actions, and finally, the faltering of that larger Western financial firewall strategy.
Yeah, it's clear this tariff war wasn't just about trade figures. It peeled back layers of complex geopolitical maneuvering, economic vulnerabilities, and questions of international trust.
Absolutely. It really highlights the deep interconnectedness of everything and how actions in one area can ripple outwards in unexpected ways. It definitely impacts global trust and how nations wield influence.
For sure. The soft power implications are huge.
So here's a final thought to leave everyone with. When you consider just how tangled up global economies are, and you think about the mixed motives of all the different players we've touched on, what kinds of really significant long-term shifts in global power dynamics might these events actually be signaling for the future?
Something to definitely keep watching.
Indeed. Thanks for taking this deep dive with us.